Your bank doesn't have your money. Like, right now, if everyone in your city walked into their bank and asked for their cash back, the banks would run out before lunch. And that's not a bug. That is the system. Welcome to Blunt Math. I'm opening case number 0001. The suspect, your bank, all of them. Let's investigate. Here's what you probably think happens. You deposit $1,000. The bank puts it somewhere safe. A vault, a drawer, a really boring storage unit with your name on it. That's adorable and completely wrong. The second your money hits that account, the bank has already lent out most of it. 97%. Your $1,000? About $30 of it is still at the bank. The rest just became someone else's car loan, someone else's mortgage, someone else's problem. You are an involuntary investor. Nobody asked you, nobody told you. You just are. And here's the part that should make you uncomfortable. This isn't some shady back alley operation. This is how all banks work, by design. It has a name. It's called fractional reserve banking. And let's do the blunt math on how it actually works. You deposit $1,000. The bank says, "Thank you," then immediately treats your money like it's theirs. They're legally required to keep a fraction on hand. That's the fractional part. How much? It used to be about 10%. In 2020, the Fed dropped the requirement to 0. As in, banks are technically not required to keep any of your money on hand. In practice, they keep about 3%, because they're generous like that. So the bank takes your $970 and lends it out. Car loans, mortgages, business credit lines, all funded by your deposit. And here's the magic trick. That $970 ends up in someone else's bank account. Now that bank has a new deposit. They keep 3% of that and lend out the rest. Then that money gets deposited somewhere else. And it happens again, and again, and again. This is called the money multiplier. And here's the blunt math. Your $1,000 doesn't stay $1,000. Through this cycle, it creates roughly $33,000 in the banking system. Your single deposit just birthed 33 grand in money that technically doesn't exist. It's entries in spreadsheets, numbers on screens, promises built on promises. That's like ordering one pizza and somehow an entire block gets fed. Except the pizza doesn't exist, and everyone owes you a slice. But here's where it gets really interesting. This entire system, all of it, is built on one assumption, one bet, one prayer, that everyone won't want their money back at the same time. Because if they do, that's called a bank run, and the math doesn't math anymore. Remember 2023? Silicon Valley Bank collapsed in 48 hours, not because they made bad investments. Well, yes, that too. But the trigger was simple. Too many people asked for their money at the same time, and the bank didn't have it, because banks never have it. Now you might think, okay, but we have FDIC insurance. The government protects up to $250,000 per account. We're safe, right? Sure. Except the FDIC's total fund is about $128 billion. Total bank deposits in the US? About 18 trillion. That's coverage for less than 1%. The FDIC is a security blanket, a very thin, very small security blanket, on a very large, very cold bed. And here's the final piece of evidence. The entire system works because you believe it works. The moment you stop believing, the moment everyone checks at once, it falls apart. Banks don't run on money, they run on trust. And trust is the most fractional reserve of all. So, let's deliver the verdict on case 0001. Your bank takes your money, lends out 97% of it, creates 33 times more money than you deposited, keeps almost none of it on hand. And the safety net covers less than 1% of all deposits. The verdict? Guilty. Now, should you pull all your money out? No. The system works. It's worked for decades. It just works in a way that nobody bothered to explain to you. Until now. So next time you check your bank balance and feel good about that number, just remember, most of that money is currently living in someone else's house. Literally. Sleep well. That was case 0001. If this made your brain hurt in a good way, subscribe. I investigate one money crime per week. Case 0002 is already on the board. And the suspect? Your credit score. Let's do the blunt math.